Yo, what's up guys? Today we got a new video breakdown. So my analysis of the 25th February. So let's get it. So here on the chart we see still we're having a heavy drop. We got here huge engulfing candles, so why not dropping even further? So I'm making this video very short, and before us starting my analysis here, please hit that subscribe button and give me a like, because I'm giving y'all everything for free, so this gonna make y'all profitable. Only the psychology is about you. I can't help you with that. So the only thing is, what you can do is just follow your rules, go for a walk. That helped me a lot also. Alright, so here we're still in that end daily fair value gap. Here we got that previous day high around here. We got that huge bearish drop here, so I went to the 4 hour. We still got our sell model around here, it building up on the end daily fair value gap, had a huge drop coming up at this 4 hourly fair value gap and dropped even more harder. So today I went to the 1 hourly because we can't analysis on the higher time frames to get anything about here. We just know we're bearish. So before New York session started here, I saw we got a market structure shift around here. We got a nice end daily fair value gap which we can retrace and go short of. That's gonna be a turtle soup every time a end fair value gap. So if you analyze it right, of course. Yeah, because of that big bearish displacement, I knew we're gonna drop somewhere around here, and it could be also taking that buy liquidity out and then dropping hard. But now we went to that hourly order block, and what do I do after coming into a hourly for order block? I'm going to the 5 minute and 3 minute. So let's see on the 5 minute which FVG we have. I want to see a inversion gap, a inversion FVG. That's kind of a change of character for me. That's gonna say we're bearish. So going here, I see we have here a huge bullish fair value gap which needs to get inversed, but I'm going to the 3 minute looking for if we got any smaller bullish fair value gap. So we got this one here. After tapping here inside, I want to see this gets inversed first before looking for any shorts. So after we closed below here, we see this weak retracement here. So going to the 1 minute, I want to see that in retracement to that inverse fair value gap here. So switching to the 1 minute, we can see this one here is the retracement. After coming up, we're gonna drop down again, and what I want to see now is a inversion gap of a bullish fair value gap again. It doesn't matter what's happening. So after that retracement to that inverse fair value gap on the 3 minute, I just want to confirm it again on the 1 minute. So 3 minute confirms with 1 minute. So after coming all the way here, I see this one here is the first bullish fair value gap. So we close down below. That's gonna say we're bearish. And what I mostly do is, after confirming everything together, is I'm looking for two turtle soups here. The first turtle soup, something like this, like that says we're bearish. So something like this, coming up and then building again to the downside, have the last manipulation, and then dropping all the way down, because I'm always going for those two turtle soup as weak off, as I told you guys in the last video, or the second last video, I don't know it right now, but first turtle soup, second turtle soup, and then drop down, but it didn't happen. So what I do is, if my model doesn't happening, is I'm focusing at the volume. So seeing here now, we just drop straight off, really bearish, and we have our sell model here, so we just completed. Okay, so having the sell model here, the first entry will be nicely here. I wasn't there, and the second entry would be here. Yeah, but I did miss this one. This will be a really nice continuation gap on the 1 minute, because if we don't hit that sell side liquidity here, I'm looking for these 1 minute continuation gaps. So I missed this one, but this would be a very nice trade to go all the way short. But that's enough, that's way more enough of a drop to use those continuation gaps, because we're heavily bearish since here. But after taking that sell side liquidity, I don't look for 1 minute continuation gaps more, because after taking sell side liquidity, it's mostly gonna, let me make this bigger, it's mostly gonna have a little pullback to the upside, and as y'all can see here, it just inverts this, so it just ignored this continuation gap here. So that's why I'm always going to the 3 minute after taking sell side liquidity and using the 3 minute as continuation gaps. So coming down here, we can see here a fair value gap, but this one here never got tapped, we just dropped way more down. The next one will be here, but here nice continuation gap here. I would have taken here an entry again, but I missed it again. I was in a train, I got something to do. So going into the 10 seconds, so after in a continuation gaps, I just use second charts. So that's why after tapping here inside this 3 minute here, I'm going straight off after the first bearish candle, because that's confirming we're bearish again. So I'm always using 10 points of stop loss, and my target will be the first 1 minute sell side liquidity. A nice trade would this be, but you can even set your stop loss a little bit down, but mostly I'm setting here. Missed this one. So after looked for the 3 minute continuation gap, we dropped way more harder here and tapped into this hourly order block. So okay, yeah, here to the left we got a hourly order block. Let me show you this. Here a hourly order block right there, and what we want to confirm it again is the 3 minute inverse gap or 5 minute inverse gap, and then go back to the 1 minute and so further. But because we still got that huge bearish drop, I'm still looking for continuation gaps to go short, because that buy model still needs to create it. But before it's gonna create it, I want to take any shorts, because London session is ending here for me, and the volume's gonna decrease way more harder normally, but sometimes, in this case not here. But yeah, so let me show you guys my model first, which I got here. I got that buying model here, but my continuation gap is here. That's the turtle soup for me here. Why is this the turtle soup? No, not because that's a breaker block. I don't use breaker blocks, because I'm going to the 5 minute after the 3 minute. I'm looking here for a continuation gap. And why didn't I took the trade right off here after tapping into the 5 minute FEG? Because we tapped into this 1 hourly order block, and then I wanted to see any bigger retracement, so I marked out the end of the 5 minute FEG, and that's gonna be my turtle soup. So also what I marked out here is this huge bearish engulfing 1 minute, and we got that end 1 minute FEG. So after tapping here in, it should drop heavily for me. So I went to the 10 seconds. I'm always going to 10 seconds, but the 1 minute I'm confirm it with the 5 seconds, but that's another case I'm gonna show y'all in another day if I got the opportunity. So after coming all the way up here, normally I would wait now for a inverse gap to close down below, and I would enter straight away. But in this case here, like trading is like freestyle. Like y'all like every day is gonna be a little bit different. Like your model is every day a little bit different, so it's not exactly the same trade. So y'all need to improve your trading and just think what's just logic for you. So after tapping it here, this should be the turtle soup. We got a fair value gap here, and I thought this 10-second fair value gap here gonna push us once more. So exactly what we did, we pushed up once more, and this should be my last turtle soup. I was entering here because I saw some bearishness around here, but I got stopped out here. and I tried it again somewhere around here, and I got stopped out again. And then I tried it one last time, and what I should did is going short after closing down below here. That's the last retracement, and then I should go short, but this was a really nice position here. So my my take profit was here, because if we go to the 1 minute, that's the first 1 minute sell side liquidity. So that's a huge that's just a risk off trade, because normally my model was going for this low here, but I just risking off. Money is money. I don't need to do any more here. I'm not going for those big risk to reward like I did earlier. Like earlier I did like 20 RR and something like that, but I don't do this anymore. I'm going for high win rate. So after taking the sell side liquidity here, we got here some accumulation, but dropped once time more. But what I wanted to see in my model is, after doing here a inversion fair value gap, that confirms we're bullish. And after that, I want to see a sell side liquidity which gets taken, and then another time taken, so twice. Exactly like the Wyckoff strategy which I talked about in the last video, or y'all can Google up the picture. It looks exactly like this, the same model. But what just happened is we took it off here once, but didn't took it off here twice. That will be the turtle soup. But I don't trade PM session. This here is the PM session here, so I don't trade it, and was calling the day off right here. A really nice trade, 6.75, and risk to reward, and I made 4.4k of it. Bro, my English right now, too much to talk here. Alright, and what gives me confidence here to enter that trade is, so those, I just ignored those fair value gaps here. And why? Because y'all can see we tapped here, like that's the 5 minute FVG here, we tapped it here, we got that 1 minute end FVG again. Y'all can see it's holding us above around here, and then you can see that huge move in a bearish market. That's a manipulation move, like a really fast move. Take out this buy side. We got here some SMT, but this was the buy side liquidity, and then we turtle souped it here on the end 5 minute FVG, just overlining all different time frames. Then I got that nice entry with the 10-second confirmation, and that's probably it. Yeah, the only thing what I wanted to see is that inverse fair value gap here, which we did. And what I sometimes do is I'm going to the 5 minute, also looking here if we're closing below the body of the last bullish or bearish candle. So we're closing below here. That is a change in state of delivery, and that gives me even more confidence. So that's just professional analyzing here. And yeah, I'm trying to go at the end of the year in 7 figures. Okay, you also got 13 minutes, and yeah, just please like my videos, please, because I'm giving y'all this for free. It's gonna make you guys huge money. And psychology, all I can say about psychology is just take like 2 to 3 trades max per day, and after that, even if you lost, that's fucked up, but you just go for a walk, just go for nature, smoke in the wood with the woods, bro. That's gonna calm you down, calm you down. Yeah. Alright, that's it for the video. Thank you guys for listening. I hope y'all enjoyed it and learned something from it. See you at the next day or the next week. Ciao.